Welcome to Get Serious. So I reviewed 2,000 parcels of land within about 84 hours. This was definitely pushing the burnout gears here. And so I just want to share some of the lessons learned from that. The whole purpose behind this was to build up more of a data repository for Land Pricer. More updates to come from that. Really, as the complexity has continued to arise here, like we're looking to bring on additional help and partners to help take this thing to the next level, especially trying to run two businesses at once. Resource constrained as it is, like it's turned into a larger vision. So I will share more on that for any of you that might have been wondering what's going on in the background. But in any case, too, we've realized that the pricing dilemma is just so much more reliant on massive amounts of data to inform correct pricing across all the geographies that we were looking at, where our initial algorithms just weren't as consistently performing. So again, just trickier thing to solve here. Pricing manually is hard enough alone. Like it's a lot of folks struggle with it, and occasionally we do as well, and we consider ourselves like best in the industry. Or plenty of other folks will consider that. Don't take my word for it. And so trying to turn that into an engineering solvable problem, especially doing it across a whole bunch of different geographies, like it's difficult to solve. So the whole goal of this was to start directionally heading towards solidifying a lower pricing variance for our calculations. So we were like, okay, let's get a data set of 100 properties and start using that to inform our model better. And like the way that we had set up Land Pricer was that each property that we're reviewing will by default select up to 20 comps auto-selected for review. You can always add more additionally, like 100 times. Most of these properties, some had a little bit less, but most of the properties that came up had 20 comps within a 10-mile radius. So like 100 times 20, it turns into 2,000. So, doing it within that span of time, it was really myself digging myself into a hole. Like I thought this was going to be a simpler project, and it was not. And I was just under the gun to get other things done. So like, oh man, I'm just gonna have to grind through this weekend to do it. Who cares? Like no one listening cares the hole that I dug myself into. I'm sure you as an entrepreneur can relate though of facing tougher deadlines. You're like, yeah, this just has to get done. You just have to eat it. But I just want to talk to you about more of the lessons learned from doing this. And so we were using properties that had been part of our that we had either funded. Obviously we hadn't done 100 properties very recently. So we were just also going across the country and just picking appropriate sold comps within the last couple months and then utilizing those as target properties. And so we also had the actual firm data. We know what this property sold for. And I was also trying to choose properties that were representative of the rest of the market. I'm not too crazy of outliers or landlocked stuff that there wasn't really anything else similar to it, or it wasn't an immediate fire sale. So some of these properties, that go pending within a day or two. Not all the time. Sometimes they can just be really superior properties, but plenty of time they could have just been underpriced from the start. And so they're priced to sell and not really representative of their true market value. So you had to be careful even selecting these properties to start here. And I was trying to get a grab bag across the country throughout this 5-6 properties in a certain state and just keep moving on and just going across most of the typical land flipping states here. And even though I was burning myself out hard, I just learned so many key lessons. I just feel absolutely on fire in terms of ability to comp properties. It's just, I don't know if anybody has reviewed that many properties in that short period of time. And we were already good, but now it's just I just feel so confident about any property people are sending over to us. And we've had a lot of deal flow come in. Big, almost near $1 million purchases. And I've just been disagreeing with some of the underwriting that people have been sending over, but I'm feeling very, very confident with our determination. Like the data is just backing it up, like not pulling stuff out of thin air. I mean, I know some folks say, yeah, you can like comp in a minute, a couple minutes here. Some areas maybe, but most people I don't think are putting enough time and patience into properly comping. Like it's most of these properties that you're looking at can be appropriately priced. There are a handful that you're really going to need a broker's assistance, like especially commercial stuff where you just really can't find any relevant comps in the area. I would say that is a small minority of the time, for most like listed property, resi, recreational, agricultural properties that don't have like a ton of unique features. Like you should be able to get a reasonable determination for most properties if you are patient enough, and let the data speak to you without rushing through or biasing yourself throughout the process. All of that to say is like, I was just diving in and like I was trying to be efficient, right? I was trying to do 2,000 properties in such a short period of time. So you learn how to be efficient, but throughout all of this, was really picking out where some areas definitely were just much easier to do than others. Like some areas of the country, price per acre was just such a reliable mechanism. Like it's just a consistent 6K per acre, even like minor characteristics determinations. I would say there was a lot of areas of like Tennessee, North Carolina, Colorado, parts of California, and Oklahoma, for instance. I was trying to choose disclosure states just to be a bit easier in terms of the data collection here. But in most areas of that state where I was targeting, not all, I'll get into that in a little bit, but you could more reliably use price per acre, and like the features were more consistent. Even like contour was relatively consistent, whether it was like a super hilly area versus a more flat area. Like you could find some really consistent setups in terms of pricing. And some areas were just way more difficult. Probably camera. Like some of the variation that I was finding, like Washington State sticks out, for instance. So in the eastern part of the state, like near Spokane, it was easier, maybe because, again, the terrain is more consistent across a lot of the areas. But closer to Seattle, there was just such significant variation. And I think, it was harder to say, area by area, but like on average, like the closer you would get to a major metro, there would be far more variability in pricing, especially for larger lots. Like again, and we were trying to use price per acre a lot more. So I was trying to stick above like 5 acre plus parcels, because like I've talked about a number of times, price per acre really breaks down sub 2 acres roughly. And in which case you just need to use raw price. So, you can find consistency there. Yeah, you get to the more urban metro areas, looking more at infill lots, but then you're just going to have to be going on pricing versus PPA. So, like, it was also dependent on the types of and the sizing of properties that I was looking at. But like, there was just so much more significant variation and, different types of, small improvements on the property, or I think closer to the metros, like, there was just a higher chance that there was more improvements either being done from a utility side or like a resi preparation, like cleared lots or, soil grading, driveway installations, etc. So that just had to be accounted for. And I was just finding, this is really difficult to find, some real consistency when it comes to comping properties here. Like it got a lot trickier on average to do that. And some of those, like if I had like sub 3 comps that I thought were truly appropriate, it's like, you really can't consider utilizing this as part of our data set, and then you have to like move on to try to do another one. And so that's just kind of something to keep in mind here as you consider any area of the country that you're working within. And some of these areas too, even in the more rural areas, like perk tests were like almost a given for all comps. Like you pretty much needed that, and it was a requirement to even be something sold in the area, or have like confirmation that water access could be provided, or like a community well. Like that was also relevant to like Washington State. So I started to learn a lot more of the geographic specific things, especially in relation to utilities. Like, if it didn't have this, like you pretty much not even, you're going to be at SOL when it comes to even potentially selling the property. That was true for a lot of parts of Oregon as well. So you start to learn, okay, yeah, so some of these areas, like the utility consideration is just a requisite to even be considered to sell a property. Another piece related, well, I think another piece too is when I was just going all across the country reviewing this is, we know that in the US it's like something like 97% of all land is vacant, or non-improved across the country. And, while intuitively we understand that, yes, closer to the major population centers, there's going to be more inventory, more active sales and so forth. I don't think we understand just how inactive, still huge percentages of the country are. Because it's like, okay, 97% of the vacant land, but, probably sporadically, you're still going to have a decent amount of activity, even if it's, comparatively less than some areas. But, I mean, there are some areas of the country, and probably percentage-wise, we're talking, I wouldn't be surprised if it's like 20-30% at least of the U.S. landmass is like not actively traded at all, or you might have like sporadic one, two-Z type of properties out there that's like almost impossible to comp because it's just so far out there. Like in a big example was like in Nevada, where you'll have some trades near Las Vegas or like just west of Las Vegas, closer to the border with California. It's like the Lake Havasu area, something like that. And then up near Reno, kind of where Lake Tahoe is. But almost the entire rest of the state, there was like no sales, no activity at all. I don't know, it's kind of like desert, no surprise. But that being said, like still there's decent amount of land where you're like, we know West Texas and so forth that will trade some of those desert square type properties. But even with that, some of those areas are just like completely blank. So I think that was just kind of like an interesting piece where, we think we have the whole country to work with. Yeah, prices can be different, markets can be a bit different here, but like it is, the land market is more constrained than you might think. Like there's only a certain amount of areas that are like trading actively enough, especially in a on average difficult market like this, to even consider participating in. So that was another piece that I thought was pretty interesting there. Besides that as well too, like it just, like I did mention, getting closer to the metros, like it just got way harder to comp. And so that's why, I was trying to comp closer to some of those areas, or like closer like the northeastern states, some parts of the Midwest, and on average, like that was just harder. Like there's a reason why the typical land flipping states, you kind of draw you from the lower 48, tend to have more because it's just those markets are more consistent. Like that kind of goes in relation to the above point. And I know some people have built businesses by going into some of those trickier areas where there might not be as much activity, but it's just, again, it's going to be on average harder to perform up there just because your data is going to be more highly varied or more sparse in terms of even a raw data perspective. So, it can be both less reliable as well as less, I'm trying to think of the word here. So you have reliable if like, you're hitting a bullseye consistently. I forget, there's another term when I was like in statistics and med school classes back in the day. Is verifiable versus reliable. I'm going to live review this because versus valid. So things could be reliable in terms of I'm hitting the same mark consistently, and more valid if it's the correct mark. So that can be true for a lot of these markets. Well, I don't know if that kind of means the same thing for the land market. Let me live think this through here. Because in order to get reliability, you're just going to need a lot of data, and valid is probably a lower, a lower pricing variance. So that works. So on average, like in some of those sparser markets, Northeast, Midwest, and a lot of areas, like it's just going to be less valid and less reliable data to work with oftentimes. So like, again, why people would gravitate towards more of those, typical flipping areas. Just because, again, we're at the behest of the data that we have to work with. So that was another pretty interesting piece to consider here. And then again, like some of these areas, like the amount of duplicates that were, just part of the data set, or, just having off-market listings. Again, it's crazy. I mean, this is part of the land game, right? But this is why it's so hard to do this at scale, of like collecting appropriate data sets and just scaling a land business to work like the same way everywhere, because the data is just so inconsistent across so many different jurisdictions and different funding for different municipalities managing the GIS and the underlying county data, which makes this all so much trickier. Or again, even finding the correct APNs and addresses from the publicly listed properties is its own beast in and of itself. Or like if an area is like crazy subdivide heavy, it's way harder to find what that underlying parcel might be, because it might not be chopped up to have its own parcel ID as well by that point. So that's just something to consider as well here when, again, our recommendation is always don't always take the word for what is on the property description. Like go back and find the core property on an aerial map to confirm the characteristics. So, but like when I was going all through this, that was, part of it. I'm checking the photos within Redfin. I'm looking at the property description, utilities, etc., improvements, anything on that. I'm confirming everything back in a map. Some areas, like I had enough of an idea, or if I found an area where it's like, okay, I already reviewed this street, I know what the next one looks like next to it. But, for the most part, especially if you're like really putting money down besides just a data set, like you want to be confirming everything from multiple different data sources. So that was another piece as well there. So yeah, we're almost 20 minutes in. I feel like there's probably some other minor pieces. I'm just kind of like going grab bag for everything that I found. So again, hopefully this is informative for your own review here. And again, it's just a reps game. Like we have gotten so good at reviewing properties, and like I talked to some other bigger land investors this year, like it really struggled this year. Like we can never forget, again, 54% of private businesses lose money or break even on a yearly basis. Half of people you talk to aren't actually like doing a good job at their business. So like just keep that in mind. And that might be yourself. I've been in that situation before too. So just like know how tricky it is to like build a sustainable business. And like we've had a great year, fortunately, but a lot of that, some luck was involved with, things bouncing the right way for us. But, the vast majority of our results is just because like we're so rigorous about our underwriting and having downside protection. Right now, my partner and I were looking like we have, 75% of the cash in our account is just reinvested profits, like hundreds of thousands of dollars right now. And that's not even accounting like our existing, still portfolio to sell a couple larger deals here. So like we've done really well managing our liquidity and cash accounts, and like that shows. And because again, we spend every single day hours reviewing properties and getting better at underwriting. So hopefully some of these lessons help you out here. Like again, I reviewed 2,000 properties in 84 hours. That's the type of volume it takes. I'm not going to do that all the time, but I can tell you it made me an even better underwriter than I had been. Translating that over to my team, I feel like I can reliably review any deal in the country at this point. Put it in front of me, $500K, $10 million, I'll find a way to review it and feel confident about it and raise money if needed. That is just like the level of expertise we're trying to build, and we are just getting started here. Take these lessons for your own business. Hope to work with you, seriousland.capital. Looking for any of funding, 50K purchase price and above, Land Daily Diligence Facebook group. Subscribe and share, everybody. Take care now. Have a good weekend. Bye.